With more than 6,000 small and micro-cap companies listed, if you're looking for the next apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by channelchek and Noble Capital Markets. Noble is an SEC-registered FINRA-licensed broker-dealer and the source of the equity research available on channelchek. Today's interview features Schwazze, OTCQX ticker symbol SHWZ. Noble Senior Research Analyst Joe Gomes interviews Schwazze Chairman and CEO Justin Dye. Visit channelchek.com or click the link in the description for Noble's research on SHWZ as well as news and advanced market data. And now, here's Joe and Justin.
With us today is Justin Dye, Chairman and CEO of Schwazze. Good afternoon, Justin, and thanks for taking the time to sit down with us.
Hi, Joe. Thanks for having us. We appreciate the opportunity to talk a little bit about Schwazze today.
So Schwazze, a unique name. For those in the audience unfamiliar with Schwazze, can you talk a little bit about the company's history and what you do and what is the meaning of the name?
Yeah, I get that question quite often. So Schwazze is based in Denver, Colorado. The company was founded in 2014 and used to provide consulting services and sell supplies and accessories and nutrients for the burgeoning cannabis industry. The company experienced really kind of a pivot in 2019. Our firm, Dye Capital, invested equity capital in the business to build out really the largest and premier growth, vertically oriented growth cannabis company in Colorado. So the business changed quite a bit in June of 2019 and pivoted to become a vertically integrated business. And the name Schwazze is very interesting. It means a lot to us. Schwazze is it's a part of our unique proprietary process in growing plants. So it's actually defanning the plant so the plant and the root structure can grow so you can get more nutrients to the flower and produce better yields and produce great bud and great flower for our customers. So it's growth by design. So it means a lot, means a lot to us. And we get questions about how to pronounce it, but it's pronounced Schwazze. And it means a lot to us and how we think about the potential of the plant and how we grow our business and make available all the benefits associated with the plant.
Interesting. So the company's goal is to position itself as a premier vertically integrated operator in Colorado based on revenue and dispensary footprint, seed to sale, in other words. Where is the company today in terms of cultivation, manufacturing, and retail assets?
Yeah, Joe. So by the numbers, Schwazze is the largest vertically integrated cannabis company in Colorado. So by revenue, and if you look at it, our pro forma revenue, we've just recently provided guidance will be $105 million to $125 million for 2021, with EBITDA of $28 million to $36 million is what we've provided guidance for. Our retail business is by far the largest portion. It's made up of 17 dispensaries, all under the Starbuds brand and banner, which we're very proud of. We also have products under Starbuds and Purple Bees for our consumer packaged products as well. That's growing quickly. Schwazze is also is number one in Colorado for distillate manufacturing. And that business, in fact, has tripled since we bought that business in April of 2020. Our legacy businesses consist of Success Nutrients, which is a very high-end nutrient line for high quality growers that we sell throughout the United States, and that's been a part of the business for some time. And then we also have our consulting business where we help growers produce better yields. And then we also have one of the original hydroponic stores in the state of Colorado under the Big Tomato brand, which we provide accessories to, high quality growers and supplies, et cetera. And that's continues to grow, but it's becoming a smaller part of our business.
So what makes Colorado such an attractive market?
We don't like sharing this too much because we love Colorado, and frankly there's a lot of good companies in Colorado, and we're not looking to have any more. But Colorado's a great state. It's the second largest cannabis market in the United States at a $2.2 billion. It grew at 25% last year, so it continues to grow. And it's highly fragmented. If you look at the number of independent dispensaries, so independent operators who run 1 or 2 stores, there's roughly 468 of those in Colorado that are not owned by the top 10 operators. So very fragmented. And our math is if we are successful in continuing to add stores in new geographies, and we can continue to buy these single store, multi-store operators, we think it's in our game plan where we could buy close to 150 new dispensaries and build a $500 to $600 million business in Colorado, which is growing substantially versus the 125 on the top end of the range and guidance that we provided. Colorado is also very sophisticated. So if you look at cutting edge technology and innovation in cannabis, there's research going on in cannabinoid research, in manufacturing, in processing technologies, and it's really on the cutting edge of that. And we get to take advantage of it really being an innovation hub for cannabis. And there's very good operators that most of which that have remained in the industry are profitable because they've had to be, and they've weathered the storm of the boom bust cycles. So those operators that are still operating today have had to be productive. They've had to have street smarts. They've had to have good common sense in running their companies and generating cash flow and EBITDA. We get to enjoy that and partner with a number of these operators as we're looking to acquire them.
So not just Mile High, a really good, solid state to be in. That's great.
We've got a great partnership with the state and many of the local jurisdictions who understand the benefit of the cannabis plant, and it's a great place to do business. And the rules are very clear. We have a very, very small black market here, so it's regulated. It's good for the category. It's good for the consumer, and it's a wonderful place to do business.
So you mentioned Starbuds for the retail dispensaries, and you recently completed a transformative acquisition of 13 Starbuds retail dispensaries. Can you provide some more color on the acquisition? How was it financed and what it will mean for the company? You mentioned about the pro forma, but I guess we'll repeat that revenue and EBITDA generation for 2021.
Yeah, we're very, very excited about adding Starbuds to the Schwazze set of brands. We're excited about it. They are some of the very best dispensaries in the United States in terms of productivity, dollars of revenue per square foot, as well as profitability. They have a great management team. They have a really great store team that works really hard on working on products and customer satisfaction. And if we can do that in a little more integrated way with a little bit more size and scale, we think we have lots of opportunity to continue to improve the performance of the business and continue to grow it. It is the leading banner in Colorado in terms of, we believe, in terms of revenue as well as productivity and profitability. When you look at it, we looked at the transaction. We financed it with $71 million of new capital. $56 million of that was equity capital that was raised privately here in the last couple of months. and $15 million of debt, senior debt financing that we secured. So Starbud's ownership group received $44 million, approximately $44 million in cash. They provided a $44 million seller note financing to Schwazze, and then they also took roughly $29 million of our equity. And as we said, we're excited about the opportunity. The pro forma businesses that we've acquired did $95 million last year, and we've provided guidance between $105 and $125 million this year, with EBITDA of $28 million to $36 million of adjusted EBITDA for the year. And that's pre any more acquisitions. And I would admit we've got a very robust new dispensary pipeline, as well as new products, as well as a very robust acquisition pipeline. And we're looking to double the business this year, exiting this year. So that would imply, if you took the top end of the range and you doubled it, that would suppose around $250 million of revenue, and we would expect 30% EBITDA margins, because we're continuing to buy businesses that are profitable.
And you mentioned that Schwazze is generating positive cash flow. What does that mean for the company's organic growth?
So the company's in great shape. We've got cash on the balance sheet, so we have plenty of liquidity and firepower. We also are generating free cash flow on a monthly basis, so that continues to be a growth opportunity for us organically as we look at new licenses, as we look at new real estate locations for dispensaries, as well as acquisitions. So for us to continue to run the business that we are and grow organically, we don't need any more cash. For us to go and continue to make transformative acquisitions, where those acquisitions are going to require at least some portion of cash, then that would require us to continue to be in capital raising mode. So to be clear, we're in a great place. We're generating free cash flow, growing profitably. But for us to really effectuate our vision of being the largest in Colorado and having a $500 to $600 million revenue business, that would require us to continue to raise capital, both debt and equity. And we believe the cost of capital is coming down, and we've seen markets change here rather dramatically the last couple of months, as well as on the legislative side as well. So we've got great momentum. Capital markets are cooperating. Regulatory environments are cooperating, and operationally, I'm really proud of what the team is doing. We've got great momentum.
Excellent. So let's keep on that M&A theme for a moment. Can you talk a little bit on the types of synergies Schwazze has been able to see with its previous acquisitions, and how Schwazze adds value to its acquisitions?
Great question. So when you look at our synergy opportunities, let me just first start by saying Colorado grew at 25% last year organically, and we're significantly outpacing that. So the business is taking market share at retail and wholesale and outgrowing the market, which is something that we look for, and we're driven towards outpacing the market. We're seeing good foot traffic, so both a balance about 50-50 between foot traffic, so new customers, as well as the average basket. The average ticket is growing about even, so that's great. New customers, new visits, as well as what they're buying more of what we're offering. When you think about synergies, so a couple things. So when we bought Mesa Organics, we bought 4 stores in southern Colorado, which we have now rebannered to Starbud's. We're very proud. The revenue of that business has doubled since we bought it in April of 2020, and gross margins, we have grown about 1,300 basis points by operating our retail system and putting in merchandising and operating best practices there. Our Purple Bees manufacturing business that processes biomass and converts it into distillate, we have tripled the production capacity as well as the sales for that business. And we bought that business back in April of 2020 as well. And we're now the leading distillate manufacturer in Colorado. from a quality perspective as well as from a revenue perspective. Other things that we're looking to do. So with Starbuds, we're getting onto a common omni-channel platform. We are centralizing our procurement functions so we can have a clean relationship with our suppliers and be able to buy together and drive unit growth for them as well as us. We see a lot of opportunity for best practice sharing. So the 4 P's of merchandising, so product assortment, placement, making sure we've got great displays, looking at pricing, as well as promotions, and bringing that kind of rigor to the business where we have a common operating system has generated benefits. And we've already started seeing some of those benefits coming through with Starbuds. And then lastly, we have invested heavily in an integrated ERP system, so a enterprise platform. So our point of sale system is integrated with our ERP system, with our financials, our manufacturing, our buying, and inventory control. And our ability to be able to buy acquisitions and then integrate them very, very quickly, we think will be at a competitive advantage. And we've got very, very robust data management and data science around looking at customer activity, around products, looking at productivity and our cost structure, which we think bodes well for us as we continue to drive productivity and become a very competent competitor.
You've mentioned developing some in-house brands that can be sold across not only the owned retail dispensaries, but also to other dispensaries. Can you speak a little bit more on these efforts?
Yeah, I think when we think about products, we have really a white sheet of paper. We're starting to architect what our brand strategy is going to be by category, what categories we're going to cover with our own products to make those available within our own dispensaries, as well as make them available to other operators in Colorado and in other states. So today we have Starbuds brand, and we also have Purple Bees. So we're using Purple Bees with vapes, and we also have Purple Bees for salves and concentrates. Where Starbuds, we have pre-rolls under the Starbuds banner and brand. And then we've got a nice product pipeline where we'll continue to leverage those brands as well as introduce other brands as well. From a customer perspective, our view is this. We will not have stores with only our products in them. We will have stores and online channels to market that represent really what the customer is looking for, depending on taste, pricing, quality, etc., and providing really great products from other suppliers that we will buy from and partner with, as well as providing products that we think are unique and provide value as well. So we will carry both and really do what the customer tells us to. And the way you do that is watch what they're buying and listen to the voice of the customer, which is really something that we're driven to do.
What about states outside of Colorado? When and how do you see Schwazze taking the successful Colorado model into other states? Any particular states or traits of states that would be attractive to Schwazze?
From our strategy is to build a really great company within Colorado with great operating leverage, with great insights into the Colorado shopper, whether they be in the western part of the state, the northern part of the state, southern part of the state, or in Metro Denver. So really understanding those tastes and preferences is what we're driving towards, and making sure we have coverage to supply those customers with the services and products that they need. Having said that, we have built out our operating system in Colorado. It's working very well. We're going to continue to grow in Colorado. But I do there are other states that we would consider. It would have to be the right opportunity, and it would have to be a state that would have an opportunity for us to be different and to have a competitive advantage and a site to becoming number one and go very, very deep in those states. And certainly there's states that we like more than other states, but I think being able to partner and acquire or merge with companies that have a competitive advantage, that have the ability to have number one share and have unique capabilities would be things that we look for. And obviously, we want to leverage our infrastructure and leverage best practices and synergies, and be able to build, a defendable business that we think supports the customer base.
We'll keep our eyes out for announcements on that in the future. Now, you mentioned previously the regulatory environment. With the change in administrations in Washington, there's been a lot of talk about the SAFE Act, Section 280E, and possibly even federal legalization. Can you provide us your thoughts on these topics?
Yeah, Dan Pabon, who runs our government affairs, has done a terrific job and really has his ear to the ground and spends a lot of time with lobbyists and legislators in various states, as well as at the federal level. Our view, there's not a crystal ball. It's hard to predict politics. It's hard to predict policy reform and changes. Our general view is we're optimistic about safe banking. We think that's something that could be done as quickly as this year. I think there's certainly momentum at a federal level to decriminalize cannabis usage and possession, and not sure the time frame of that, but I think we could certainly see that. I'm probably a little more optimistic that we could see something along the lines of a States Act that would allow individual states to regulate themselves with regards to the cannabis industry versus a federal mandate that would be uniform across the states. But I think that will take some time. And I think the key that we're looking at is really looking at the Biden administration, looking at their policy priorities, and obviously looking at the House and the Senate, and looking at what their priorities are. There's no question that the momentum towards regulating cannabis and legalizing cannabis is behind us, and we've got great tailwinds. So we're optimistic about that, and I think you're going to see meaningful reform and change over the next couple of years. So I think there's not a better time from a regulatory standpoint to be in cannabis today. So we're very optimistic.
Thanks for the insights. Now, as you know, and readers of our reports know, we see Schwazze as an undervalued situation, especially when comparing the company to other cannabis firms on things like EBITDA. What steps are you taking or expect to take that you think could help bridge the current discount?
Yeah, we now is really a great time for us to tell our story. We've put our operating systems in place, people, process, technology. We've got a great operating system at retail and for our products, brands. Our ERP system and our technology is in place, and we continue to improve that. We've got data and analytics. We've got a data science group that's up, so we have real insights and can make good decisions around promotions. And now's the time for us to pivot and add to not only those fundamentals, but really tell the story, which we really haven't done in a proactive way because we had these other things we wanted to get done. And we're going to tell the story and tell folks who we are. We've done what we said we were going to do. As we said, we've built the largest cannabis company in Colorado. I've been running the company for a little over a year with our team. Our team's in place, and now's the time for us to from an IR perspective, reach out more, do it more frequently, and make sure we're telling people what our capabilities are. So we think there's a great opportunity to do that. And when I look at our valuation, I mean, we're one of the most profitable, we're a top 10, top 11 most profitable cannabis company in the country based on the statistics that I look at. We're also in the top 12, 15 of companies from a revenue perspective, and our growth rates are terrific, and we're really just getting started. And I think we're as fundamentally sound and have as good a management team as any in the country. Our team has done this before in other industries, and we have great cannabis leaders. So we're very optimistic. So you're going to see more of us doing non-deal roadshows. You'll see us at more conferences. I'm going to spend a lot more time getting out, sharing our story, and doing that along with some of our other executives. So we think now's the right time to do that, and we're upbeat. We're trading about 8.5 times on a fully distributed diluted basis of EBITDA, 2021 EBITDA. And our peers and counterparts are in the 20s. So we think there's an opportunity for us to we're very undervalued.
Well, we certainly look forward to seeing how that unfolds. And finally, Justin, maybe you can tell us a little bit about yourself, your work background, and how you became CEO of Schwazze.
Yeah, it's pretty boring, but thank you for the question. It's really, Schwazze is about our team. It's not about me, but I'm happy to give you my background. I grew up in Winslow, Indiana. It's in Pike County, Indiana. It's a small farm town, and played sports there. Went to college at DePauw University in Greencastle. I was fortunate and played tennis there. Started my career at Arthur Andersen in management consulting, and found my way to General Electric, and I worked in M&A and strategy for GE aircraft engines, and worked with some amazing people there. Had an opportunity to run the X-ray technology non-destructive testing business in Hamburg, Germany, in the early 2000s, and then found my way, was recruited to Cerberus Capital Management, where I worked on as an operating executive for them, and was involved with leading the Albertsons grocery company take private back in 2006, and we grew that business from a low point of about $3.5 billion in revenue and grew it to $60 billion. And today that business has got about a little over $4 billion in EBITDA. So really proud of everything we did there. I was recruited to think about running another publicly traded cannabis company, and ultimately didn't pursue it, but had an opportunity to study the industry for 6 months. And then we made an investment. My family office, Dye Capital and Company, made an investment in Schwazze back in 2019. We were growing very quickly, and at the end of that year, I became both chairman and CEO. And since then, we exited that year with about $9 million of revenue, and we're exiting this year on a pro forma basis north of $100 million. So we've made really good. Last year was very difficult with the pandemic, et cetera, and our team did a really great job, and we made adjustments throughout the year to continue to make us viable and competitive, and we're exiting the year with great momentum operationally. Capital markets are cooperating now, and from a regulatory standpoint, things have never looked brighter. So we're sort of in the sweet spot right now. But I give all the credit to our team. I'm the guy who's sort of the orchestrator, I guess.
Well, I think you're being a touch too modest there, Justin. It's a great background. It's very impressive. But I do agree with you. You've built a great team. All great leaders do. It's really about the team, and you've built a great one, and we look forward to seeing how that plays out at Schwazze. Well, Justin, we've covered a lot of ground today and got significant insight into what Schwazze does, its markets and opportunities. We appreciate you taking the time to do this CEO interview, and we wish you and the company the best in the future.
Joe, thank you so much. Appreciate all you do, and great questions today. And it was an honor to be able to represent Schwazze. Thank you so much.
Joe, this was a really interesting interview. I can say I don't know a lot about this industry, but it was fascinating to learn. Couple of things, a lot of investors, I think, feel, and maybe as I do, are questioning whether or not this industry is kind of a flash in the pan. We're going through decriminalization, and then obviously we're getting in this great big growth spurt. How sustainable it is this growth that we are seeing? And I kind of look back at, the periods of Amsterdam, like in the 1970s, when they decriminalized cannabis, and saw decades of growth, for a couple of decades before we started to see stabilization. Is that kind of what you're thinking in terms of the growth trajectory of this industry?
Yes, I think if you look at it, Michael, you're looking at a business that, remember, for decades has operated in the shadows. So people that consume the product, were consuming it illegally. And now that it's become, accepted and legal in so many states and continuing upon the path possible decriminalization along the federal level, I think you're going to capture even more people. The old image of the person smoking their joint and walking around smelling like marijuana, is disappearing. And you have many more ways of consuming the product today and getting the benefits of the THC that you could only previously get by smoking. For instance, they have edibles now that, the soccer mom that is suffering from back pain or knee pain, she can take, and, no one's the wiser that she's taking it. So I think that, currently this is a 20-80 market where 20% of the consumers are consuming 80% of the product. That, you're bringing in new people, and you have the opportunity to take those infrequent users and have them consume on a more regular basis. So I think you are looking at a market that should enjoy years, if not decades, of growth.
I also found it pretty interesting that he, as a company, is focused on Colorado. And I know Colorado skews younger than the mean average of the United States population. And then it also skews higher in terms of incomes. What are the other attributes that might make this more of an interesting market for cannabis?
Well, I think you're correct on that, but I also think Colorado is one of those places that was kind of at the forefront of the natural trends. Where you have firms like Celestial Seasonings in their teas that what was based in Colorado. And some of the back to organic food type stuff. And I think this is similar in that it's back to nature. Back to that type of environment where, I think the people in Colorado are more willing and open-minded of trying those types of things than maybe, some of the more buttoned-up states are.
And Joe, you mentioned about the stock valuation gap. Of course, this is a relatively young company. Do you think that's the issue, that investors just haven't discovered this company yet, or do you think there are other factors?
Well, I think it's a combination. There's so many. This real space has been inundated with companies coming public, and so many of them, have minimal revenues, are negative earnings. That I think there's been some investor fatigue, and then you layer on top of that what happened in Canada, where you saw the valuations for companies skyrocket and then drop like a stone, as you saw overproduction. So I think there's been some investor fatigue. I think, yes, the fact that it's a relatively new company, and really this year will be the first year where it's really making a mark in terms of revenues, EBITDA. And so I think this will be the year where investors start to turn their eyes to a firm like Schwazze.
Well, Joe, thanks for bringing the management team to us. I always enjoy learning about new companies and new industries, and I greatly appreciate that. Thank you.
Thanks, Michael. It's been a great interview here, and we really like the company going forward.
Thank you for joining us for this C-Suite interview presentation brought to you by channelchek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and microcap companies listed.